Guys, we had 3 scalp trades today on 3 different stocks: Palantir, MicroStrategy, and Tesla. All very similar setups. Let me take you through it. So Palantir today, looking at the daily chart here, was primed for a breakout to all-time highs. But as you can see here, we had this little break of the $80 area, and then we sold off fairly decently after that. So all that amounts to is a false breakout. And when that happens, we're just looking for opportunity here. So you can see this green line here is where it closed on Friday. The stock opened up and made a little push here at the open, but then sat back down under and went red on the day. And then you can see this little support area started to form here, right around the 79.30s, 79.50s. So when we got multiple tests of that area, and then we finally broke down. So there's our entry right there. We entered right around 79.40. And as always, what I do when I enter a stock, I set my stop loss. TradingView has this really nice tool here that you can use. You just plot it right at your entry here, and then you can set your stop loss. Here's our breakdown candle right here and our entry candle. So I like to set my stops just above the high of that breakdown candle, or just above the 9 EMA, this little green line here. So we were risking about 60 cents a share here. So as you can see here, our stop is right around 60 cents. And in order for this trade to make it worthwhile for me, I need to set a profit target at twice my risk. So I'm looking for $1.20 profit. One thing I like here on this tool is that you can use this risk reward ratio. You just set it at 2-to-1. Get that all the way down here to right around 2. And there's my profit target right there in the low 78s. So we entered the position at 79.40s, and we covered half of the position once we hit our initial target right in this area. And then we just look for reasons to exit on the rest of the position. And one of those reasons is on the first candle to break the high of the previous candle, which we get right here. So we have these nice washout candles here. None of these candles are breaking the high of the previous candle until you get right to here. So another quarter of the position we cover there. And then we look for reasons to exit on the last part of the position. And as you can see here, we get this little consolidation area. And ideally, we get another move down even lower, but price just kind of consolidates, and then we start to build above that. So took the final quarter of the position off there. So that was Palantir. Let's take a look at MicroStrategy. Kind of a similar move here. We had some weakness out of the open, and then we started to break down. Again, we just pull up our short tool and set it right at our entry. We got short in the low 349s, and we just set our stop kind of in the same place, just above the high of the breakdown candle. And then we're looking for a 2-to-1 risk versus reward target. So that's right in the 341s there. We got out of half of the position there, and same thing, took off another quarter of the position here. And then we just started to move sideways, tried to break down again, but held up. So that's a reason to exit on that final quarter. So same kind of trade. And then we had Tesla. Well, first I wanted to show you actually this little tool. Once you take off half of the position, you've taken half of your profits. The way that I like to manage my trades from there is set your stop at break even after that. that protects against the stock going against you and turning a winner into a loser. When you move your stop down to break even on the rest of the position, then you're guaranteed to walk away with a winner. It might not be a huge winner, but it's going to be a winner. And that's how you protect from any spikes going against you and turning a winning trade into a losing trade. So let's go to Tesla. This one is a little more challenging. Very, very similar pattern, as you can see from the previous stocks there. Once we started to break down, we got our initial entry into the 424s. And we had this initial move lower down into the 422s. And then we just kind of popped up and we're moving a little sideways here for a few minutes. And then we got another attempt to break the lows, but it held up. So that is a clear signal that the trade is probably not going to work in your direction when you get a double bottom. There's clearly a buyer there. So if you set this little tool up again here, right at our entry, 424s, we set our stop loss just above the 9 EMA. I didn't want to risk all the way up to the breakout candle because there's a $6 risk there, $7. I figured any close above the 9 EMA would signal that we're probably wrong on the trade. But once we got this double bottom, that to me was a sign to get out because it wasn't ready to go at that time. So we took a small initial loss on this. And then what do we do after we take a loss? We just wait for it to set up again. And what ended up happening was we made this move up to the VWAP area and we sat back down under again. So this VWAP is kind of like a balance on the day. The bears are in control underneath and the bulls are in control above. So to me, the bears were still kind of in control here. So once we sat back under, I took another entry back in the 424s again. We set our stop loss and look for that 2-to-1 profit target. Right about in 418s there. So we took at least half of the position off there. And then this one didn't have any continuation lower. It just kind of moved up again. So we were out a quarter of the position in the 420s again, and then got stopped out at break even on the rest of the position. So that's pretty much how I manage my trades. And just because we get stopped out doesn't mean we're necessarily wrong on the trade. We're just wrong at the time frame that we're trading. So let it stop you out and then just readjust and reevaluate and get back in. So that's all we have today. Join us next time for some more trading tips and advice.